Hey, everybody, and welcome back to the channel. Today is a special day as I've got Lior Gantz back with us. If you were here about 6 months back, we did discuss the precious metals market about midway through 2021 last year. He gave us some valuable insights as to what to expect going forward in the precious metals market as well as other markets. Lior is the CEO of the Wealth Research Group, and he has a team of professionals on the ground that keep up to date with market trends. They're analyzing compiling analytics to make informed decisions for those that are looking to intelligently invest in 2022. Lior is an avid stacker and accumulator of precious metals and also an investor in what some would consider contrarian investments like the precious metals market. I'd like to thank you, Lior, for your time today. And with that out of the way, I'll let you introduce yourself as well before we get started breaking down the precious metals market today. So thank you once more for being here.
Thank you. Not even my mother gives me so much praise. In terms of like my personal story, when I was 13, my father's business went bankrupt, so I started working and saving. In hindsight, obviously a blessing in disguise. When I was 16, I actually got my banker to help me set up a brokerage account. He got my two parents to come in. They signed a waiver as a minor. I started trading right after the dot-com bubble. So in hindsight, a really great time, obviously lucky. Yeah. So that was when I was 16 in the year 2000. And 2008 was the pivotal point in my life. I can say my father went bankrupt again. And by that time, I'm 24. I went to the States and I started to bargain hunt, real estate, anything, you name it. And I also picked up a lot of books in Barnes and Nobles, and that's how I got into precious metals. And that's been a very important part of my life ever since. In late 2015, the Federal Reserve raised rates after 8 years for the first time. And I said, in my opinion, gold has bottomed. And that's when I started to realize that nobody else cares about gold. And not a lot of people my age know a lot about investments if they're focused about on their careers. So I realized that, man, so many people ask me questions on a daily basis. I'll just launch a newsletter and they can just read it. Friends, and it just grew from there. So wealthresearchgroup.com is a free financial newsletter where we publish at least 3 times a week. And it's basically everything I do for 6-8 hours a day. Calling CEOs, researching, etc., and then condensing it to like a 5 to 6 minute read. And you can also access my portfolio 24/7. Basically, if you go to the website and click on the live portfolio, and you can see exactly what's going on with my own life.
Wow, that's incredible. Lior, personal question on that then. If I were to access your portfolio, would that be your equities portfolio, or would that also include some of your, potentially tangible investments or other assets such as gold, silver, crypto, etc.?
Currently, that tab is solely focused on the equities, so stocks, and that are larger cap, so 5 billion and up is inside of that portfolio. It's not a trading portfolio; it's more of a long term. But we're working on it to evolve it to more of a push notification, etc., where you really see more of the trading side as well. You can also go to wealthresearchgroup.com/price, which I love that because it's sort of it's a watch list, including all of these limit order prices that I have set already, and it's constantly updated. You can download that and follow that along as well. So that's pretty cool.
Oh, that is great information, especially for someone like myself who likes to stack primarily as a method of saving wealth on the side while also investing currency into the markets to try to obviously increase my wealth. So thank you for offering that service to us. And considering that service, when you look back at 2021, namely the transition of power from the Trump administration to the Biden administration, and how that change in government here in the United States has impacted the equities markets, also Fed policy, and most importantly to my audience, how that trickles down to the precious metals such as gold and silver. So how has this transition from your viewpoint impacted the market over the last year?
So there are a lot of historical data sets that you can look at what happens when a Republican president transitions into a Democrat president, House, and Senate. So it's a blue trifecta. And historically, that's not the best setup for markets. So that's one thing to just keep in mind historically. But the United States government is an oil tanker filled with 16 million employees. To assume that somebody like President Biden can turn this ship around, it would be naive. This ship has a very it doesn't move easily. And so I think the markets are way more impacted by what the Federal Reserve does and by what the free market economy does than by what the government does. So that's one thing to keep in mind. So I don't pay that much attention or in terms of the impact on a portfolio. The fact that Biden is the president doesn't mean a whole lot to the way that algorithms on Wall Street, which are like 70% of the direction of markets, how they trade. So there are pivotal days and pivotal moments, such as when the budget didn't go through, when the ceiling was hit, when the Build Back Better plan was blocked by Joe Manchin. These are things that are important, but on a day-to-day basis, I would say that focus more on macroeconomically on what the Fed does, and in terms of the micro, focus on businesses, on companies, and on when you analyze businesses for your own portfolio. I think that's much better. To answer your question, I think, look, when Biden was elected with a blue sweep, I called it peak stimulus. I knew that that's it. I thought that they would not do any more stimulus checks after January, and they have not. I thought that was it. Once once the voter picked blue all the way, to me that signaled that's as good as it gets with stimulus, and that's been the case. So that's one thing that I think people should understand, because I see all these people talking about a fourth stimulus check, UBI. Forget it. Yep. What the U.S. government is focused on is getting people back to work, because they don't want to go back to work. A lot of people have made a lot of money, and then half of the husband and wife couple, either the wife or the husband retired early. They're working. They have so much portfolio money or real estate money or income from other sources. They don't need two jobs anymore. That's one sort of person that has exited the workforce. You got a lot of people that went back to school and they're out of the workforce for the next 3-4 years now. And then you got a lot of people that have started their own business. They've started a small business, a lot of people. So 600,000 people have started new businesses. That's a record high for 2021 in the United States history. So you see a very tight labor market. And even with all these vaccines and everything else that they thought would bring back people because they'll feel safer, they're not coming back. And so that's the main issue that the government is facing. And that's why they will try and unwind all of these stimulus measures, including the child tax credits. They'll try to dwindle them down little by little. So I think that's one thing to keep in mind with the government. As we head into the midterms, there's a lot of up in the air stuff, like what's going to happen with taxes, what's going to happen with social infrastructure, et cetera. That's why I think the markets, at least in the first half of this year, are going to be very choppy, very volatile, which plays right into gold because it's a great hedge for Wall Street when whatever they're doing is not working well. So that's good. And then I also think that Biden's approval ratings are super low because of Main Street inflation, because of inflation that the everyday person sees, so much so that he had to intervene in Federal Reserve policy. It got so bad. And I think that will continue for 2022. So inflation will continue to be a problem in 2022, and the midterms are going to start taking focus as we head into the second part of the year.
Yeah, absolutely. So listening to what you just said, it sounds sort of like bad news, to be honest with you, because it doesn't sound like a super exciting time. However, one of my favorite movies back when I was a kid was the movie Braveheart. And there's a scene with
Yeah.
King Longshanks. A lot of people didn't like the guy. You know, he's a villain in the movie. But
Yeah.
he says to his generals, as king, you have to find the goods in any situation. So as a trader, as an investor, as someone who runs a company like yourself, you know, we as individuals go to the polls and we vote. But at the end of the day, we have to live and be successful regardless of whoever's in office. But so that's why I liked your point there. And also just kind of wanted to express that I know your team has been actively working to try to find winning solutions, even given, you know, this period of time with higher inflation. And so I'd like to transition away, I guess, from Biden and Trump and more towards Chairman Jerome Powell, who served under, you know, both administrations, really. And he indicated that his team has indicated now for some time that they were planning some rate hikes in 2022. There are many on my channel that think the Fed has painted itself into a corner, and that once the liquidity or the money dries up, that could have some potentially more negative consequences. I'd like to get your thoughts on it, though, Jerome Powell and the potentially pending rate hikes for 2022.
Okay, so I love rate hikes. Rate hikes are really important for the economy because they show who went to the beach naked and not wearing a swimsuit, as Buffett so wisely said in 2008. So yes, rate hikes show which companies are better positioned, which people are better positioned, etc. They serve as a weight on valuations. And so a lot has already been priced in, a lot. If you remember, you know, GameStop and everything that happened a year ago, that's when Wall Street realized this is the peak of a crazy bubble. And as you know, from there on, except for the top 10 companies in the world, the top 10 biggest companies in the world, half of the NASDAQ is at 52-week lows. More than half of the New York Stock Exchange companies, these are 3,000 companies that have gone down by 50%. So the bubble has popped. Along with that bubble, there was a lot of weakness in gold. Why was there a lot of weakness in gold if you had record inflation not seen since the early 80s, early 90s, in the 70s, etc., all these different matrix that came out. So the reason is that gold loves a sure thing. And the only sure thing is when the Fed tells you we're going to raise rates at this particular date and at that particular amount. Why is that good for gold? Because the price of gold reacts to two things. One, it reacts as a hedge to stock market weakness. Two, it reacts to negative interest rates. In 2021, the indices, which is where most of the money is parked, did amazingly well. The top 10 companies did amazingly well. And so gold didn't act as a hedge. Nobody cared to own gold on Wall Street. And that's what moves the price of gold, because you could put money in the top 10 biggest companies in the world and make 20-25%. That's amazing. This is over. Right now in 2022, this is not the case. You're not going to see the same environment on Wall Street because raising rates puts a big question mark on the stock market. So do we have gold as a hedge for 2022? Yes. Secondly, do we have negative interest rates? So what has the Fed basically said? Before Powell, and by the way, if you go to wealthresearchgroup.com/2022, in other words, 2022, I created the whole comprehensive report about this entire thesis in length. You can, download it, sit with a cup of coffee or tea over the weekend and just go over it, and you'll be better prepared for what's coming in 2022, because most people think rate hikes are bad for gold. The Fed has raised rates 6 times, 6 periods since 1971. On average, gold has gone up by 30%. And it's gone up 100% of the time. So it's not like it's 30% where one time it's 100 and one time it's minus 20. No. 6 different periods, 2 in the mid 70s, 1 in the 90s, 2 in the 2000s, and 1 that started in 2015 and ended in January 2019. 6 times they've raised rates during the fiat monetary system. Every time gold has risen once the first rate hike was conducted, and the average gain was 30% from start to finish. So that implies a $2,350 an ounce for gold for this period. So we're in a very good period for gold. And here's the reason. So one, raising rates hurts stocks in general. It puts a lot of uncertainty on stocks and gives you an alternative. It gives a lot of these big money pension funds, sovereign wealth funds, and algorithms a chance to buy bonds, right? The 10-year bond right now, as we're doing this interview, it's touching 1.8%. That's the biggest. It's pre C19 levels. So these are very high yields in general that you can get. And what people don't realize is when pension funds buy a 10-year bond for 1.8, it's not because they know they're going to make a killing. It's because on the flip side, they're hedging it with some Japanese currency or another currency because they're mandated only to trade bonds. They cannot move to stocks at all. But then there's another group of companies which have to be like 60-40. And when the stock market rises so much, they get to a level where they have to sell some. They're actually forced to sell some and buy bonds. Yes. And so this is what you're getting into. This is the period you're getting into right now. There's forced moving into bonds and selling stocks. So that's really important to keep in mind as we enter 2022. So that's one thing. Gold is a great hedge. Secondly, if the Fed does what it says it will do and raise rates 3 times, that will take the Fed fund rate to 0.75. Yeah. 0.75 when you have GDP growth at 4% and inflation measured by the Fed. So inflation taking out oil and food still at between 2.8 and 3.5, you're still talking about a very negative rates environment. So you've got the best of both worlds for gold in 2022. I think what you will see in Q1, you will see the 10-year bond try to get up to 2% and then struggle. When it struggles, that will point towards the bottom for gold. And wherever it bottoms, 1780, 1770, 1800, wherever it bottoms from, when the Fed does raise rates in March, which it 90% will, gold becomes one of the safest and historically one of the surest things to put your money in. So we are literally about mid-January. So we are about 2 months away from one of the best times ever to put money in gold and gold stocks. And that is historically proven over 51 years. So you're in a very good environment right now for gold and gold stocks, not so much for the stock market or like the S&P 500 and the NASDAQ, the big ones that are very heavily weighted on big tech. And when we go into that second half of the year with the midterms, then I think everything goes up together, rallies together, both the markets and gold and gold stocks. So I think we're into the first half of the year where gold is going to be a very good performer. A lot of momentum trading will come in, and then second half, everything starts going back up again.
Okay, well, that's great to hear, Lior. So then just kind of analyzing what you just said there, in your viewpoint, then you consider this Fed policy decision, the direction they're moving, to be a bullish indicator for the price of gold, as well as those within the gold mining industry, royalty companies, etc. And I'm already seeing the change in the market. It feels like money is moving towards more traditionally defensive sides of the stock market, and those high-flying tech companies like Google and Apple that just have massive war treasuries, whereas money is now beginning to leave those winners from 2022, some of those winners in the
from 2021,
Yes, sir. 2021, those high flying winners. So I can see and sense the change you're speaking about here. Very interesting regarding gold, namely considering traditional think is that as interest rates rise, bonds become more appealing and gold less appealing to institutional investors. So it's always nice to hear the other aspects of that.
Let me give that distinction. So when you raise rates from artificially low starting points, as we are right now, that's when gold rises on rate hikes. When it stops to rise on rate hikes is when they get too aggressive and create the bedrock for a recession. So if they tighten too much, if they tighten the noose too much, that's when recessionary fears come in. We're nowhere near that right now. We are in one of the best recoveries, fastest recoveries. We can't even find people to work. This is not the case. Wall Street will find that out. And when they realize they were wrong, gold can have like a $50 an ounce day or $100 an ounce day, like big days, big moves where suddenly it's in the news, it's on CNBC, etc. That's when you need to start looking at trickling down your trades. If you own gold stocks or if you're in options, etc. Regarding tech, big tech is one thing. I think big tech will be weak, like Google, etc. I think they'll be flat for the first half of the year. But small tech companies, those that are already down 50, 60, 70%, the darlings of 2020 and until GameStop, in there are some of the best opportunities, and they will trade in correlated to gold. So when gold starts moving up, because the bond sensitive trades have bottomed, then I think these companies, the tech companies, are going to do very well, very, very well. So we're going to definitely cover them on Wealth Research. Some of them have 4, 5, 6, 700% upside potential, and they're amazing companies that have gone down and wiped out entire generation of millennials that kept buying them when they were just too expensive.
Yeah, absolutely. And on my channel, I do try to, obviously not a financial advisor, but I do like to
absolutely
remind people that the more gold and silver that you've managed to stack, the more comfortable I personally feel in investing in some of those more risky equities like that.
Really true.
I have that fallback, but the young folks, it's hard to convince them to see the value of something that's not moving 5 to 10% per week. As things have come to be this year. Hey, I noticed that you pointed out a few times in history where we've seen previous periods like this. And I'm just curious, Lior, if you could provide the audience with a little insight as to how you capture this data from, going back to the 70s and analyzing things today in order to put together, the report that you've put together for free for all of us to take a look at for your 2022 forecast.
Yeah. So as you know, there are a lot of financial companies that's what they do. They aggregate data and they sell subscriptions or they sell reports. These can be thousands of dollars. These can be hundreds of dollars in subscription based. These are research companies. Some of them are big ones like S&P Intelligence Group, but there are a gazillion of them. Some of them are more like just charts and technical analysis. Others are more political. You just have to kind of research for these financial and economic outlets, and we aggregate them, and then we think about what we read, because a lot of companies have their own internal biases within them. So the data is one thing, and then their own insight may be wrong. So I look just at the data, not at the insight. Other people, where I see a good track record, I would lean more on understanding their insights. Where I see this period very similar to is the late 60s. So in the late 1960s, in 1968, the United States was running also giant deficits on the back of the Vietnam War. The dollar was being questioned as a model, as a reserve currency for the world, as the 35-1. Even going as much as Charles de Gaulle, the president then of France, saying, look, I want an audit. I want you to audit the Fed or audit Fort Knox, etc. And then obviously Kissinger and Nixon said, look, if we audit, then the 35-1 will be exposed as a sham. And then he went on and closed the gold window. That same time, that late 60s is when, or early 70s is when the boomers started entering the period where they entered peak earning years. They were becoming about 30 years old, and they were moving the economy forward. So that in the early 80s, their economic boom led the United States. And that's where we are right now. So if you look at like the period itself, we have higher inflation. We have millennials right now, it's 33% of the workforce on their way to becoming 75% of the workforce. They have as a generation in aggregate have not bought homes, have not gotten married, have not had kids. There's a huge boom that's about to happen in the United States demographically, and you've got high inflation. So we are in an inflationary boom. And another thing the millennials have not done yet is they have not gotten into the stock market in terms of they've just gotten in. Just last year, they started opening brokerage accounts. Right. So all of this, while the other side of the world is not the same. So Europe is struggling, Japan is struggling, China is struggling. The United States is where you need to be. That's where the boom is. And I think that when you couple everything I just said, this decade is going to be amazing. And at the same time, understand what it means for the dollar. It means that the dollar will be very, very weak because money velocity, because of the C19, it reached a record low. People were just being frugal, saving. The rich have saved and saved and saved, and people have been locked up, etc. The money velocity in the United States right now is the lowest it's ever been, ever in the United States history. But we've printed 25% of the currency in 1 year, which means that if the velocity of money just goes back to aggregate, you are in for a very inflationary decade with a very weak dollar. The DXY index for the dollar, when you see it go below 88, it confirms the bear market. And I think at that particular time, you will literally see huge problems for the dollar and a great time to be in commodities, real estate, and stocks. So if you ask me about cash, I think cash is a real big problem as an asset class. I don't like cash in the years ahead at all.
I see. I myself am pretty curious about that because there are lots of talks, especially folks that have taken profits coming out of the last 2 years, on how much cash they should potentially be holding today, given the uncertainty. You mentioned that gold likes the sure thing, but we're still waiting on that actual first Fed rate hike. But Lior, I kind of wanted to transition before it loses my train of thought here to inflation itself, because last year, and you brought this up, we witnessed higher levels of inflation globally and in the United States, but we also witnessed gold peak around January 5th of 2021. So 5 days into the year, it hit its high for 2021, and silver hit its high right below $30. About a month later, as you know, silver follows gold. So I'm just a little curious to get your insight as to what you see spot prices in particular with our favorite precious metals and how they'll react. I'm assuming based on what you spoke about earlier that it'll be positive for gold. Do you see any impact for the silver metal with this Fed decision and the direction they intend to go?
So as you can see, gold and silver peaked right around GameStop at the same time because the markets were correlating tech with gold and silver. Both are very bond sensitive. And at that particular point, everyone knew, man, we are in a bubble. We need to tighten. So tighten means sell gold, sell silver, sell tech. And that's what happened for the rest of 2021. And everything that went up was just based on the top 10 companies in the world. Literally, the S&P 500 and even more, the NASDAQ 100 are like a hedge fund. They're like 50% concentrated in just 10 stocks.
Right.
So
yep.
even though it's like 100 companies. So, okay, so we already had the correction. We've already had the crash. These asset classes, gold, silver, and high-flying tech, have already come down so much. Like there's nothing else the Fed can say that's worse than what they've said in December. We're going to do it sooner, stronger, more aggressive. The market has had time to price the worst case scenario of tightening in. Right. And that's why I'm telling you, we're very close to the bottom. wealthresearchgroup.com/squeeze is the report we put out, the download report about the failed silver squeeze of January, February 2021. We know that you cannot squeeze silver in the way that it was attempted to be squeezed. All the stacker community did was hurt itself because the bullion deals didn't have the inventory, and then you needed to go and pay like 50 or 60 on Amazon or something. That's not the way that silver rises. Silver right now is about 22.5 an ounce, which is it's the ultimate support line for it. It's already tested it. It even broke below it and came back. I think what you need to look at is where silver goes above 25. That's where a lot of the algorithms are becoming bullish again. And my opinion is I would wait until silver is 29 an ounce, which is the resistance. If it's able to breach resistance, you've now have a very good asymmetric bet. In other words, instead of speculating on whether or not silver can make a move here of $7, which is 33%, I personally would wait until it's 29. Once it's above that, I think it's going to around 36, so that's still $7, but the risk reward is way better. And so I can take a leverage bet on silver. I can go with silver miners. I can make way more than that 25% of that $7 offers me. So that's my that's my opinion about silver. And silver will move with gold. So look for that rate hike in March. And gold stocks, they follow silver. They don't follow gold. So you need silver to be hot for mining companies to be hot. That's what drives in speculative money. Gold doesn't drive in speculative money. We reached 123 to 1 gold versus silver during the Trump years. The gold miners did nothing. Gold and silver, when the ratio narrows to 65 or below, that's when speculative money comes in to the sector and buys the mining shares. So right now we're in accumulation period and not in a breakout period. Look for that 29 for silver. If you think that's a lot for it to go from 22 to 36, well, you haven't seen a silver bull market. It moves really fast, like really fast. Yes. So that's my opinion on gold and silver. In my opinion, both of them have reached way more towards their bottom than they have to go. The risk reward is very favorable. So that's what I think about that. And it's very important to understand that Wall Street moves silver. When you go and try to squeeze the bullion dealers, it does nothing to the COMEX. And that's where the gains are. So I think it's really important to realize this. If you want to squeeze on the COMEX, or if you want like silver to go up, silver correlates most with oil and the dollar. Oil needs to go to 100 a barrel for silver to become really, really hot. That's the scenario that I'm talking about. And the dollar needs to go below 88 on the DXY. Watch those two. We will definitely cover them on our newsletter. And I think that can happen in this cycle. We are starting a cycle. In March, we are starting a cycle. It's very exciting. And so, I mean, the upside could be tremendous.
Right. So in your opinion then, Lior, today would be considered a accumulation period. And my strategy that I tend to pass on to my viewers is the same, only that to look for those lower premium options when it comes to physical delivery of precious metals. Obviously, my channel is mostly focused on physical metals, keeping in mind that we do discuss the market and equities as well.
Okay.
So would you agree that now it would be a pretty decent time to accumulate at these lower prices, assuming you can get around the self-inflicted wound of the previous silver squeezes with the now higher premiums to purchase and hold physical?
I like to do this. What I've done in my own life, I have taken my monthly burn rate as the family unit. I have multiplied it by 2 years, so 24 months, and I've taken 2 years worth of savings and I have converted them into physical gold. So that's my physical gold position. Once that 2 year saving became less than 5% of my net worth, I raised it to 5% of my net worth. So I like to hold physical gold at 5% of my net worth. That's basically my plan. And as it grows, I grow my hoard. And obviously, I like to buy more when the price is before a breakout because I can buy more ounces.
Right.
Historically, 50 years is a good time to measure the performance of gold and silver. Gold performs better than silver over the long term. That's why I hold more physical gold than physical silver. Silver, to me, is a great trade. When I see a cycle like we're entering right now, I'm going to be way more aggressive on silver, but as a trade. I'm not going to hold silver forever because it just doesn't work. It's not the right strategy. The right strategy is to make a tremendous amount of money with silver as a trade, take profits, move those profits to physical gold. That's the strategy. Yeah. Make the big money with silver, switch it on to physical gold for preservation.
Yeah, and there are a lot of folks like myself that stack both metals. I look more at my gold as long-term savings and my silver as potential opportunity to for that spike when it does happen.
Yeah, believe me, I own silver, physical silver as well. I just know that gold performs better over time.
Yeah, and you can see that in the charts. You're going to see more peaks with silver. Larger run-ups on positive news and larger declines on negative news. And most of us are pretty familiar with that. I did want to go back briefly to inflation, namely how the U.S. government is reporting inflation. We've seen CPI continue to increase as each month passed by this year. But to be honest with you, Lior, as someone who lives here in the United States, everything is more expensive today. And the bottom line in the old checking account that my wife fortunately manages for our household, we made more money last year. We got the stimulus checks, having a couple of small children and just based on my income levels. But yet everything it's not really impacting, in the
bottom line.
Gas, food, medical, it's all up. So I'm just a little curious to get your take on what's really going on with inflation, vice what is being reported, so that my viewers can kind of break that down.
Yeah, initially it was a lot of supply chain issues, and supply chains just means that manufacturing in China and in the 50 other countries that are cheaper than China to manufacture at, they were doing fine. Apart from the lockdowns, manufacturing was really strong. U.S. side, lots of demand because of the stimulus checks and otherwise. So that was strong. So supply and demand were really good. The problem was when you try to transport the supply to the demand, the ports couldn't handle it. The trucking companies couldn't handle it. It was the logistics that was the problem. So those are getting sorted out. On top of that, you really have a shortage in housing in the United States. So that drives up rents and prices, plus very low mortgage rates, fixed mortgage rates, the best in the Republic's history, drove a lot of people to take out a mortgage. And 12 years have passed since the mortgage crisis, so people's trauma is gone. It's not even the same generation. So you've got these things: housing, rents, and consumer goods, which are 72% of the GDP for the United States, going up a lot. And then you got the Fed taking out food and energy from the way that they measure inflation, which makes for this like dual world, right? Where the Fed is saying it's 6%, it's really bad. And in your life, it's like 13%. So we have to realize what Wall Street measures inflation and how it trades accordingly is not the same as what the real economy is. Okay, so for the 150 million people that work in the United States, and certainly for the 70 million that are paycheck to paycheck, which is a quarter of Americans, they don't live in that world where they say to themselves, man, well, you know what? My NASDAQ has gone to a all-time high, so I'm good. I've hedged. No, they don't have shares of the Dow. So for them, the way that the United States is operating, which basically the United States is a giant corporation that houses the world's biggest companies and treats them like royalty and treats the rest of the people like servants. For them, they get the short end of the stick, while the other people get the great end of the stick, and that's where you get the wealth gap. So the 70 million need to learn how to be like like the top 10% or the top 30 million. They need to adjust. They need to change their lives, because they will not change the system. So you either change your life or you change the system. And I know a lot of people would just rather try to change the system, but it's very hard to do. It's very hard to do. And my train of thought, because I realized this like a decade ago, I was like, man, this is a scam. This is bullshit. Yeah. Like this is unfair, right? I was like 24, etc. So I realized that I can do both. I can change the system or do my part to change the system, but I don't need to become a victim of it at the same time. So I learned a lot about finance and economics, and at the same time, I do everything I can to educate on why this is unfair, literally. So we all know it's unfair, and it's the only real solution is a tough solution, which is to adjust to the way the things are and to build a better future. In other words, take what you can and change. And the best time to change anything is from a point of strength. And that's why I like to live under this dual mandate of one hat is trying to get wealthy and financially independent and as strong as I can for my own family and my own surroundings. And at the same time, where I see problems, I want to try and solve them and help other people understand what's going on.
Oh, it sounds like you're developing a playbook then, Lior, a good defensive and offensive strategy there for yourself, for your family. And that's what I'm doing. And more or less, I lean on you and professionals in your industry to garner information that I bring to the channel, that influences my own decisions. So I appreciate your insight there on inflation and how the government has responded. I also did want to point out, you mentioned that, record profits, a lot of corporations are sitting on a lot of cash these days based on those record profits. How do you see that cash moving during 2022 from, some of those hot tech plays last year, maybe away from the meme stocks and the meme cryptos? Where do you see things going this year? Obviously gold and silver, but when it comes to equities, do you see, money flowing into any particular sector of the economy when it comes to investing?
Look, I think that the United States has shifted a lot towards a tech country and a healthcare country. Those are the two main sectors. So that's where I see a lot of the action. I like tech and I like healthcare. Secondly, I think cybersecurity is a huge, huge threat on the global economy. I think that it's something we need to understand, and I think that there's opportunity in cybersecurity equities, etc. So I look to that, and I also see a lot of changes that have to do with the millennials. The millennials are nothing like their parents, so I see a lot of opportunity in food. They eat differently. They think about health differently. There's a lot of opportunity because literally the baby boomers are the richest generation of all times, and they're starting to retire and to unfortunately die and leave their money to their children. So there's a huge wealth transfer from the 80 million boomers to the 80 million millennials. And that wealth transfer is what made Buffett rich and Carl Icahn and George Soros. These are the people that got rich from the creation of the boomers. Now there's going to be another wave of billionaires, millionaires, etc., from this new wave that is money moving from the baby boomers to the millennials. And I think we're just starting that right now. This is a full decade of a huge boom in housing. So if you know where millennials are going to live and you can cater to their housing needs, you're going to make a fortune. If you know how they plan to raise their kids and what toys they want to buy them and what brands they want to buy for that whole thing, you're gonna make a fortune. If you know how they like to party and have a good time and what they like to do in recreational activities, make a fortune. That's where your focus should be. How do I serve, please, and give everything the millennials need and want? That's where the opportunity is, because that's where the money is, and they're just going to get richer and richer. So I think that should be your focus. In terms of opportunity within the gold silver space, because of this huge shift, I think that the dollar is going to be very, very weak. On top of the fact that it's going to be very weak, China is going to surpass the United States as in terms of the largest GDP. And become the number one economy in the world, either in 2025 or by 2027. So the biggest change in more than a century is coming in the next 4 or 5 years. A decade later, their military is going to be bigger than the United States military. So not only is it going to be the number one economy, it's going to be the empire. So there's a lot of changes coming in the next decade and a half to the United States. I think there's a lot of opportunity and just specialize on a niche and find a way to capitalize on it as much as you can.
Absolutely. Well, thank you for that advice. Yes, millennials are making money, they're spending money. If you can create value for that demographic, then you should find success. Speaking of millennials, and I wanted to kind of move on to the big elephant out there in the world today, and that is the impacts of the C-19 virus. And specifically, you're hearing a lot of things about Omicron. Is this a big deal for the precious metals market, for equities? I'm just throwing it out there. I myself am vaccinated. I have many vaccinated and unvaccinated friends that are getting sick today. Some of them have already had COVID and getting sick again. But I'm just curious to get your viewpoint, your take on whether or not this latest variant we're hearing about in the news is going to make big impacts, big splashes here in the first part of the year.
Historically, when you look at other very famous plagues and pandemics over the last few centuries, the variants that are fast spreading but very weakened, they usher in ends of pandemics and turn them into more of a seasonal flu type. So I think the Omicron is a great sign that this is ending. And I think by the summer, the vibe on the world stage is almost going to be like the same vibe as Liberation Day after World War II. We're going to be in a great time for the human race. People are going to be cheering that for the most part, this is going to be over. This social responsibility where I have to do something in order to save another person will wither off, and it will be an individual choice. What do you want to do? How do you want to protect yourself from it, according to your age group, according to your risk factors, etc. For the most part, this will be the last winter. It is a big problem if history is any precedent. So I like what's going on in terms of the medical efficiency of the Omicron sweeping through the world, creating herd immunity, basically clearing Delta out of the way, which is the more violent one.
Yes.
And so that it's really good. And I want to tell you that 800 Wall Street CEOs were surveyed and were asked if that's their number one concern. 3 said yes. 3 of 800. What CEOs on Wall Street care about is just the Fed policy this year. Are they going to raise rates too much? Are they going to be too aggressive? What's going to happen with that regard? And then the labor market. People are CEOs are very afraid of the fact that workers are not coming back. There's a lot of robotics that are being introduced in order to compensate for this. So a lot of automation is moving forward. A lot of automating companies that are going to flourish, mostly with jobs that people don't even want to do. Jobs that suck, basically. So
I'm seeing it myself.
Yeah. So that's coming, and that's going to be bigger. I think by next year, if we do another interview in January 2023, I don't think we will even talk about C19 at all.
Well, I really hope you're right there, because quite honestly, and I'm sure most watching we're over it. We're tired. We've done our part. We're ready for it to end and get back to life as we once knew it. Actually, a better life.
Yeah.
With only 3 of 8, you said 800, is that right? CEOs.
Yes.
Only 3 identifying the C19 pandemic as a major concern. What would you consider? I'm assuming the Fed is big here, as the most pressing threat to the global economy at this time.
Most pressing threat is Taiwan. Taiwan is a country of 24 million people. It is a country that has declared independence, but China sees it as part of China. If you want to research the history of it, just Google the history of Taiwan, and you'll see that basically they flourished as a Western society on an island that's right across from. There's, if I'm not mistaken, between. Let's just say they are the capital of chip manufacturing in the world, and so China wants them to come back to Big Papa.
Right.
Taiwan doesn't want to. Chips are really strategic to the Western world.
We're seeing that.
Yes, and China is building artificial islands surrounding Taiwan and declaring those international waters as part of China.
Yeah, we're seeing those artificial.
It's a huge problem. Yes, it's called the South China Sea. So watch for that, and then so that's one thing that can happen. Like this can be another Hong Kong situation where you'll see military going into Taiwan. I don't know if the United States will intervene. Australia is where this becomes a global situation where this can literally trigger war.
Absolutely. Their natural resources are immense.
Yes, and they are an ally of the United States, but they are highly dependent on commerce with China. So look for that entire thing. I would say that's the biggest threat to the global economy. Second biggest threat is cybersecurity. What people can do. Sorry?
Oh, we've seen that too with the many hacks.
Yes,
of,
absolutely.
Financial institutions, you name it.
Yeah. So I don't know if you've seen, there was a phenomenal TV show called Mr. Robot, where basically he wiped out the ledger of this company called Evil Corp, which basically is like it's like a Goldman Sachs or a Chase or whatever, right? So they controlled everybody's finances, and he hacked into them and erased their ledger, and it created anarchy, etc. There's a lot of things that can go wrong with cybersecurity, and I think that's the second biggest threat. I would say that right next to where I live in Tel Aviv, I would say the Middle East is a pretty volatile place in terms of the relationship between Turkey, Syria, and Iran, and anything that has to do with nuclear armament. So I think those are the 3 big ones. But to your portfolio in mind, I would say how the Fed manages this rate hike period would be the most pressing problem.
All right. Well, thanks for sharing that. So obviously there are geopolitical issues at stake here. If Taiwan pops off, there are concerns about what Mr. Putin would do in Eastern Europe, and obviously there's some concerns coming out of Turkey with their current financial situation and how that could impact 2022 as well.
Yeah.
Lior, we've been going at it here for a minute, and I know I've got, I could go all day. Trust me, I've got plenty of questions, but I wanted to get to this final question here, namely for my viewers, and that is, if it's kind of a twofold question, and that is,
Okay.
how would you and where would you start if you were a young man or woman today that potentially is most likely not financially independent yet, right? Likely paying off student loans, a mortgage, maybe starting a family, or somewhere in between. Where would you start with Wealth Research Group? Where would they look to try to garner some information on how to best get started for 2022? And then conversely, for those more established, experienced investors and stackers, many of which are sitting on a lot of tangible wealth, how they can best play 2022 in your mind going forward. Where to start, and what would you do today in either of those camps?
So young people first, I would do three things. One, I would find partners, one or two partners, similar-minded, people that are very passionate on financial independence, and I would brainstorm with them constantly until you figure out a business to start. And I will challenge between them to read as many books as possible, become financially literate, and I would sacrifice a lot to do that. I can tell you, in my 20s, I did not go to parties, and I was reading books all of the time and looking for partners and deals, and just getting into that world. Secondly, I would find that second group, as you said, people that have a lot of money, but they're in their 60s, 70s, late 50s. They don't want to work. They want their money to work, and I would become part of their world. How can I help you move your money? I would become an intermediary between people that have money and good opportunities. Millennials are way better at finding opportunities than people that are from from older generations. Millennials know a lot better about how to search online, how to go to and research these things. And I think that's an edge that they have. So partner up with people similarly as young, and challenge the three or the two of you to to find the perfect business to open up, and challenge yourselves in terms of books and reading. Do a lot of reading and discuss it. Think through it, okay? And I will tell you, if you do that for a year, you will be on the right track. Find those networking events in your area where you can find millionaires, accredited investors, and start talking to them about their needs. See how you can solve their problems. That will be the second thing as a younger investor. And third, start to save and invest whatever you can. Just start doing it. Sacrifice anything that you don't need and find the way to do it. If you can do those three things, then you're on your path. A lot of people are working minimum wage or whatever. Doesn't matter. It doesn't matter where you start. Deliver way more value than you're paid to do. Just do it for your own sake, not because of your boss or anything else. Just be way better than your present place, and you will just move up. If your boss doesn't see it, then the regional manager will see it. If he doesn't see it, then one of the clients will see it. It doesn't matter. Be way better than what you're paid to do, and opportunities will come your way. You will have more opportunities than you'll know what to do with. Second group, the 60s to 70-year-olds, they live in a world where interest rates are zero, but or in other words, bond deals are zero from governments, but that's not the case in the private sector. I'm personally invested in a lot of debt investments that pay between 8 and 10 fixed per year. That's so nice. Yes, 8 and 10%. Those opportunities are out there in real estate, and you need to take a look at them. You need to search online and find the best platforms for yourself, especially if you're an accredited investor. Then the world is your oyster. I think 8 to 10 is phenomenal for the world we live in right now. I think real estate is, even though it's an all-time high in terms of the prices and such, I think it's going to remain a very good opportunity for income and yield for the next decade, because there's a shortage of about 3 million houses in the United States.
That's right.
Just don't think that because something is at an all-time high, it won't go and double in the next decade. Because if you told anyone in the Great Depression, when the Dow Jones was like 20 points or 30 points, that it would be 30,000 points one day and the national debt would be 30 trillion, he would tell you you're mad. But here we are. Yep. So all I'm saying is the United States is the best economic machine in world's history by far, with all of their troubles, with World War I, World War II, influenza, flus, wars, Vietnam, Korea, assassinations of presidents. Nothing has come close to the economic machine that the United States has become. And your 30 to 40 year olds, that demographic group, which is the innovative group, this is the Zuckerberg group, the Steve Jobs group, this is where your big ideas come from. They've never been bigger. They've never been bigger in size. There's a lot of potential in the United States. So with all of the problems and all of the criticisms about the way that the government operates, the free markets are going to be way more important than government incompetence. It's always been that way and it'll always be that way.
Well, thank you, Lior. I'm a part of that generation, and I consider myself as kind of a hybrid between a millennial and that middle generation, someone who's still hustling.
A Gen Xer, yeah.
Investing in himself. I mean, I've got a 9-to-5 and 5 now streams of income that I've managed to build, including this one. So, I mean, I'm a hustler.
Okay.
Good advice. Put some time and effort into your education, learn a trade, learn a skill, and stick with it. Commitment pays off. Sir, I'd like to thank you for your time. Do you have any other closing comments for the audience today, potentially regarding your website, wealthresearchgroup.com? So that was /2022 for that free report.
Yeah.
And also /squeeze. And I'll have those links down below in the video description section for anyone to access. Any parting comments then for the audience today?
I would say just in January, I like to draft my 2 life principles. And I do like to share them. So you can also, it's not financial or anything. It's literally life principles. So if you go to wealthresearchgroup.com /total, so TOTAL, these are the life principles that I try to live by every day. And I hope that some of them are something you can implement and copy in your own lives, because they've helped me a lot. So that's definitely something I'd love to share.
Well, thank you for sharing that with me. Absolutely. I'll take a look at that. And I'm always looking for mentors and influencers as well. So thank you, Lior. Thank you for your time. I hope you have a pleasant night out there. And I'd like to schedule this again for about 6 months' time, and we can look back at this conversation and analyze from there.
Absolutely.
All right. Thank you again. Thank you, everybody. Once more, links will be in the video description section. Hope you enjoyed this interview today with Lior Gantz, CEO of Wealth Research Group, and a guy just like you and I, trying to make a living and doing the best he can. So thanks for watching today, everybody. Please consider hitting that like button and subscribing, and we'll see you soon on another precious metals focused video here on the channel.
Thank you for watching our video. I hope you subscribe to our YouTube channel.